Hi, everybody. Welcome to 32Soft's 50th webinar. I'm Denise, your host for today's session, and I am delighted you are all able to join us. Each of you has already been entered into our $50 gift card drawing just for registering, and each of you will be entered a second time for attending live today. But wait, there's more. If you are able to hang on until the end, it's typically about a half hour, and then complete our very brief survey. I think it's about 4 questions. We will enter each respondent a third time. Our webinar demos typically highlight basic capabilities, although our team is always happy to meet with your organization one-on-one to take a look at configuration options more specific to your business needs and nuances.
Hello, everyone. Today, I would like to talk about work orders closing and variance analysis in QED. Depending on what is your business role in the company, you might say, how on earth you can talk about the whole webinar about work orders closing, but it's just a simple change of work order status in QED. And you won't be far from the truth. Depending on the point of view, work order closing in QED could be either a simple change of order status to C in work order, or answering yes when receiving units completed. Or it can be also a tedious task of analyzing and finding the source of various work order variances. From operational perspective, when work order is completed, the quantity produced gets reported in QED, the completed work order is closed, and activity begins on the new one. But in addition to quantities being associated with the work order, it also has a cost side. By being able to accurately measure cost, businesses can accurately price their products and identify inefficiencies to stay competitive and profitable. When work order is closed in QED, the number of variances or differences from the expected standard cost are being calculated and posted to general ledger. Different types of QED work orders will respond differently to the closing, and I will talk about these differences shortly. But first, I would like to briefly look at the types of the variances associated with work orders and how they are calculated. Types of work order variances in general correspond to the standard cost elements: material, labor, burden, subcontract. These variances are further split into usage and rate variances. For example, labor usage variance arises when labor hours reported for the work order are different from the standard. If it takes 5 hours to complete an operation that's scheduled for 4 hours, the labor usage variance will be the cost of 1 hour of labor. Rate variance arises when cost of the reported component is different from the standard. For example, if pay rates are defined in actual pay rate maintenance, rate variance is calculated as difference between actual employee pay rate and the standard rate for the work center for work order labor reported. Rate variance is not associated with labor only, the example that I just gave. It could be part of materials, a contract, or burden variance as well. For example, if standard subcontract work order cost is $10 and PO cost is $11, then there will be $1 subcontract rate variance for the work order. For materials, it is the difference between the cost of the actual and required component quantities. The same applies to usage variances. When you issue components that are not in the work order BOM, they are considered non-standard and treated entirely as usage variance. If the subcontracted quantity received is different from the standard subcontract quantity needed, the difference will also be treated as usage variance. There are also a couple of other variances associated with work orders in QED. There is a separate floor stock variance, which can be treated as a type of material variance. Sometimes inexpensive, easy replenished components are held on the shop floor and used as needed. They are not part of work order bill of materials, and cost of those items is reported as a floor stock variance in QED. Work order reject items end up in the scrap variance. The cost posted to the scrap variance depends on what operation reject has been reported. If an item completed the entire process before being rejected, the entire standard cost will be written off to scrap. If an item is rejected partway through the process, then only the excess cost incurred to process the rejected item up to that operation is written off as a material variance. Scrap variances appear also if expected scrap quantity identified by yield percentage is different from the reported. And also there is a variance called in QED method change variance, the most mysterious one. In QED, value of all open work orders is stored in a work in process account. When the work order is closed and all accumulated variances are posted, the VAP account gets cleared, and difference between standard cost accumulated variance and VAP amount is posted as method change variance. So you can say that method change variance is a residual variance, everything that couldn't be included into all the above types of variances goes there. Work order variances also contribute to the current cost. I would like to bring back the first slide and make it complete. So closing work order and posting accumulated variances to general ledger also updates current labor and subcontract cost. Now about how different types of QED work orders respond to the closing. There are two main work order types in QED: standard and cumulative. You can also call sometimes standard also called discrete work orders. So let's put it this way: standard is all work orders that doesn't have cumulative type. So when standard work order is closed by changing work order status to C, variance posting to GEL is not happening. To clear VAP account, calculate and post variances, you will need to run work order accounting close. Only then standard work order gets fully closed. When cumulative work order is closed, all previously unposted variances are posted to general ledger. Variances for cumulative work orders, unlike the standard work orders, are accumulated when repetitive transactions are recorded for a cumulative order, assuming the standard costing method is used. And they are posted when you run one of the following functions. So variances are posted if you run post accumulated usage variance. I believe it's 18.22.9 mainly in QED. This function creates GL entries for variances accumulated since the last time it was run. Another function is actual cumulative work order close. It closes cumulative work orders and creates GL entries for variances accumulated since post-accumulated usage variance was last run. This function also allows to transfer VAP balances to another cumulative order or post them to method change variance. And also the work order accounting close function that you need to use to fully close your standard or discrete work orders will also close repetitive work orders. Now I would like to show you a solution for work orders closing and variance analysis we are working on. This is our active project and we wanted to share it with you and hear your feedback. Let me bring on the screen the loader. Most of you are familiar with the concept of our data loaders that provide convenient and easy to use interface to QED data maintenance and analysis. With work order closing workbench that you see on my screen, you can download all open work orders from QED based on the range of selection criteria, and you and analyze accumulated or projected variances. So let me do a short demo how I can download them. Just selected QED database. Here are my selection criteria. I want to download cum orders for site 1000, and I want to see only cum orders. I will show you, I will talk about those other criteria a bit later. So I will click on download. It asks for my user ID and password. And here are all my open cum orders. Please disregard the dates. This is our test database. We never closed almost. Those work orders that you see are never closed, and you can see that they've been accumulating some variances for a long time, but it's a good example for the demo. Some of the lines highlighted, that helps me to indicate the work orders that I need to pay attention to. For example, the greenish or grayish, not sure how it's displayed on your screen, lines, those are lines that are not active more than a certain number of days. I put 1000 here just because you see the last activity on some of them. If I will change the dates, for example, to 50, then it will all kind of get green. So it means these all have not been active for more than 50 days. Then there are some amounts highlighted in yellow. These are my variances that exceeds amount I specified here. Here I said that, okay, I want to highlight all variances that are plus minus $500. So that helps me to spot something that could be out of normal or out of ordinary. Okay, so here I see for the site selected, I see these are cum orders because I selected to view cum orders only. I don't have much information on discrete orders. I'll show you how they look like in a moment. And for each cum order, I see cum ID, I see the quantity received for the cum order. Quantity order is not usually very accurate because sometimes it's just once, and cum order stays open until it gets basically closed. And then there are variances, for example, and variances, the typical QED variances and that match cum work order variance report in QED. And for example, here I see scrap, I see setup labor variance, setup burden, and my total variance is $105. I can select my work order ID and check some other details about it. So I can compare it with a cumulative order variance report in QED. Let me show you. Let's switch so we can see both. Yeah. Okay, here. So this is my cum variance, and this is labor usage variance. And if you scroll down, so this is total cumulative variance, and it matches what we've calculated with the tool. Then also for cum work orders, I can look at the history, total quantity produced, the quantity scrapped, the for each operation, what components have been used for each operation, how much scrap was reported at each operation. And this way, these reports help me to identify the source basically of those variances that I see here. It's possible that I might not be able to do anything about them because the only solution would be to recalculate the standard cost, or as in case with material variances, huge material variance can, for example, signal that I forgot to issue some components, so I issued more, things like that. Also, the VAP balance again shows me this is what I will most likely see in my general ledger on my VAP account, and I will know the source of that amount. There is a number of other drill downs for work orders. I can select work order comments, if any, right? So I just added one for the demonstration. I can look at item details to get more information about the item, and I can look at the cost report. Again, and when I decide to close the work order, I'll just go to select work orders that needs to be closed, say yes here, and we'll click on the close orders button. We'll try to close them in QED. There is a control or security, another security check, so you won't accidentally close what's not supposed to be closed, and you are aware how much variances you agree on. So here, when you're closing, you need to specify total number of work orders to be closed and total variances that you will be closing. If variance doesn't match, and I will attempt to close, so let me try to leave 0 here first. I will try to close. The errors will show up. The number doesn't match the total number of work orders I'm closing. I will try to close orders. Again, the number now matches, but Q variances is different. It's 16 million in my case. So I need to specify it here just to confirm that, yes, I want to close this work order. And for work orders, you will see also the their start and end effective date. Most of them are expired because they are end effective date before today. That's how status is identified. You see number of days inactive. And if there is any information that you is using in QED to make a decision whether to close work order or not, we can add drill down to that information here on this spreadsheet. So this is how Q work orders look like. I want to show you also the regular work order. You'll be able just from one spot to collect a lot of information about work orders. So for this work order, you know there were no activity on it. You can click on variance details, and because it's a discrete work order, they behave in QED differently. There is no cumulative variances. Variances are calculated on the fly when you run accounting work order close. The same calculation here as in work order accounting closing function. Okay, for example, this is the discrete work orders with some VAP balance. I can just select and click on VAP cost report. You can see what was happening on the work order, how much have been issued. You see that the quantity sits in the operation 15. And if there are any work order comments associated with the work order, you can click on the work order comments, review them. If you want to close the work order, you can select the, let's close this one, select this work order, no variances, so it's easy for me. I will click on close. This will assign work order status to, change work order status to C, because that's how discrete or standard work orders are closed in QED. And if I will re-download, that work order disappeared from my list. It won't show up because its status has been changed to closed. I will now pass control to Denise. And so if you have any questions, please feel free to ask them either during Q&A session or anytime after the webinar.
Upcoming webinars. Yes, after a smashing debut this summer, Don Lindsay returns to impart more of his extraordinary wisdom in both October and November. First, forecasting. What does the future hold? Don will cover both quantitative and qualitative forecasting techniques, as well as the specific tools in QAD that can help you. In November, we have production capacity planning and QAD, what you need to know. I think that title kind of sums that one up nicely. So let's see. For those of you who somehow haven't yet met or worked with Don, please know that he is highly skilled in all areas of QAD, and he is our MRP master. As you see on my slide, Don taught at the APIC certification program at California State Fullerton for over 20 years. So if you have any training needs, there is no doubt Don is your man. We also have some fall conferences coming up, 2 of them. So if you'll be attending, be sure to stop by. Next week, we will be in Cleveland for the Midwest User Group Conference. Don will be there on Monday presenting. And on Tuesday, Nancy will be joined by Lance at TS Tech for a case study about managing the product lifecycle. Then in October, we head to the West Coast User Group Conference. Links to our upcoming events, webinars, and conferences are always available at the bottom of all of our communications and on our website as well. Yeah, we love an active group. You guys are great today. So for the final thought, if your company is manufacturing a product, you're creating manufacturing variances, period. And the devil is in the details. So why not quickly pluck your variances before you close those work orders? Again, thanks very much for your time today, everyone.